Welcome to the Deep Dive. We're here to cut through the noise and give you the insights you really need. Today, we're tackling a big one. A company that, well, it sparks a lot of debate. Tesla.
It really does. More than
But
just
it's-
cars, right? It's almost a phenomenon.
Exactly. And our mission today is pretty straightforward. We want to give you, our American investor listener, a really clear, informed view of Tesla as an investment. We've pulled together a ton of expert analysis, the latest financials we have, that's as of July 31st, 2025, and, perspectives that go way beyond the headlines.
And it's crucial because Tesla, well, it just doesn't fit neatly into boxes. Is it an auto company, a tech company? It's kind of both and something more. The vision goes so far beyond EVs. Think AI, robotics, energy.
Right.
So this deep dive, it's about giving you that multifaceted view, not just what's happening, but really why it matters for you as an investor.
Okay, let's unpack that. Tesla, founded back in 2003, obviously revolutionized the EV market. But
Right.
like you said, many people still see it mostly as a car company. But the vision is much, much bigger.
That's the core of it. It's not just about replacing gasoline cars. It's about building a whole sustainable energy ecosystem and maybe even transforming society with AI and robotics down the line. It's a long game they're playing, decades ahead, potentially.
So how does that break down? What are the key pieces?
Well, first, obviously, EV market leadership. They didn't just join the party. They basically created the modern EV market. First with premium models, the S and X.
Yeah, the ones that got everyone's attention initially.
Exactly. Then they scaled massively with the Model 3 and Y. Really opened the door for EVs globally.
But it's more than just the cars themselves, right? The tech underneath.
Oh, definitely. Their innovative tech is, frankly, still way ahead in many areas. Battery tech is huge, especially their own 4680 cells. Bigger, more energy, potentially lower cost.
Those 4680s, we keep hearing about the ramp up.
Right. It's critical for their cost, structure, and range. Plus, their powertrains are super efficient, the software is sophisticated, and then there's full self-driving, FSD. That's the really big future bet.
And they build so much of it themselves.
That's the vertical integration. Making their own batteries, the supercharger network, direct sales and service, it gives them enormous control over quality, cost, the customer experience. It's a huge advantage.
Okay, so cars, tech, vertical integration. What about outside the vehicle?
That's the energy business expansion. It's not a sideshow. Solar panels, Powerwall home batteries, the huge mega packs for utilities.
Right, the grid scale batteries.
Exactly. It shows their commitment to sustainable energy beyond just transport. And then, looking even further out, the future tech investments.
Like the robot.
Yeah, Optimus, the humanoid robot,
Yeah.
and Dojo, their AI supercomputer for training autonomous driving, and of course the whole robotaxi concept. These are massive R&D pushes, aggressive bets.
You absolutely cannot talk Tesla without mentioning Elon Musk. It's
It's
central.
For sure. The Elon Musk factor. It's significant. His vision drives incredible innovation, no
Yeah.
doubt, and he's built this incredibly loyal fan base.
Oh.
But yeah, for investors, his unpredictability, especially on social media like X, it can cause major stock swings. It's a double-edged sword. Drives hype, drives risk.
Okay, grand vision, future tech. But what about the here and now? The bottom line. Let's dig into the financials. Based on the latest data, maybe Q2 or Q3 2025 earnings, what stands out?
When you look at the numbers, say around mid-2025, you see a company still growing fast. Total revenue. Still mostly vehicle sales, yes. But the key trend, the really important part, is the growth in energy and services. That's
Yeah.
accelerating. Diversification is actually happening.
And profitability, has that held up with all the price cuts we've seen?
Net income has shown pretty consistent profitability, actually,
Mm.
which is impressive given the market, and it speaks to their focus on margins and the growing contribution from higher margin software and energy.
Margins are always the big question mark, aren't they? Especially in auto.
Constantly watched. Gross margin and operating margin, they definitely fluctuate. Pricing changes, production costs, raw materials, it all impacts them. But here's a key differentiator. Software sales, especially anything tied to FSD, has a really positive impact on margins, much higher than just selling hardware.
And they generate a lot of cash.
Their cash flow is typically very strong. Operating cash flow is robust, and that's what fuels all these huge investments. New factories, R&D, even some share buybacks.
And the core metrics people watch, deliveries.
Always. Vehicle deliveries and production volume. They remain fundamental indicators. How many cars are they building and selling? That still drives a huge part of the narrative.
So it's clear cars are the engine, but the fuel mix is changing. Can you break down those revenue streams a bit more? It's not just car sales anymore.
Right, it's more complex now. Automotive revenues are the biggest chunk, yes. Model 3, Y, SX, Cybertruck sales. But within that, you also have regulatory credits, selling emission credits to other automakers. Very high margin, that stuff.
But maybe not sustainable long term.
Exactly. Volatile, and it shrinks as others build more EVs. Then there's energy generation and storage. That's solar, Powerwall, Megapack sales, growing nicely.
Okay.
Then services and other, supercharger fees, repairs, used cars, and critically, FSD software revenue, which has its own complex accounting rules.
Because it's not fully delivered yet.
Precisely. Revenue recognition depends on progress towards full autonomy. And finally, future business. Robotaxi, AI, these are potential massive streams, but still mostly in development. The big strategic point. Tesla's pushing hard to grow energy and services, diversify away from just car sales, build more stable recurring income, and how FSD revenue eventually gets recognized. That could significantly boost reported profits later on.
Okay, let's zoom in on the most recent earnings then. Say Q2 or Q3 2025. When those numbers hit, what are the absolute critical things for investors to look at, beyond just the headline beat or miss?
Good question. First, did they beat or miss expectations on revenue, EPS, deliveries? That drives the immediate stock reaction. But beyond that, what are the growth drivers? Are vehicle deliveries still growing strongly? How are the new Gigafactories ramping up? What about new models like Cybertruck or even early robotaxi progress?
And defending those margins we talked about.
Absolutely key. Margin defense. Are they holding up against price competition? Are cost-cutting efforts, like, say, getting 4680 battery production smoother, actually working? That's crucial.
Is the diversification strategy showing up in the numbers?
That's the next point. Diversification. Is energy and services growth real and accelerating? You want to see that strategy paying off.
And FSD updates are always huge news.
Always. Any FSD updates on the tech, progress, safety, and especially how they're accounting for its revenue. And finally, guidance. What are they forecasting for future deliveries, revenue, margins? Often that moves the stock more than the past quarter's results.
So those are the quarterly pulses. But for a growth stock like Tesla, you often need different metrics, right? What about the bigger picture valuation stuff?
Right. Traditional metrics can be tricky. Tesla's PER, price to earnings ratio, it's famously very high.
Sky high sometimes.
Which tells you investors aren't just paying for current profits. They're betting on massive future disruption across multiple industries. It means the stock is priced for perfection almost. Any stumble can hit it hard.
So PER doesn't tell the whole story.
Not really. You also look at PSR, price to sales, another growth metric. EV/EBITDA gives you enterprise value versus cash flow, another angle on operational health. You always check cash and debt. Tesla usually has a strong cash pile, which it needs for all its investments. Debt is generally reasonable for their scale.
And one thing for income investors, dividends.
Ah, yes. Important point for many American investors. Dividend policy. Tesla pays no dividends, period.
All profits back into the business.
Every cent. Reinvested into expansion, R&D, new factories, new tech. It raises a fair question. Is that the best capital allocation? For a company aiming so high, maybe. But it definitely shapes who invests. You're betting purely on growth, not income.
Okay, so beyond the earnings reports, what are the constant news flows, the market dynamics that keep Tesla investors, on the edge of their seats? What should you be watching day to day, week to week?
Oh, it's relentless. If you follow Tesla, you're watching constantly. Deliveries and production numbers, monthly or quarterly, are huge. Gigafactory ramp-ups, Cybertruck, robotaxi progress, immediate market movers.
Pricing changes too, right? They seem to adjust prices often.
Their pricing strategy is very dynamic. Cuts or increases, they directly hit margins and sentiment. Big swings often follow.
And FSD and robotaxi, and you mentioned them as future bets. How big a deal are the updates there?
Massive. FSD and robotaxi progress, safety data, any regulatory news like from the NHTSO here in the U.S. are critical catalysts.
Yeah.
We also saw the robotaxi reveal planned around August 2024. The feedback and path forward from that is huge.
What's the biggest hurdle there, tech or regulation?
It's probably both, but maybe leaning towards regulation, public trust now. Can they get approval for widespread use? That's the billion-dollar question. Also, watch for new models. That lower-cost car, sometimes called Redwood or Model 2, that's a potential game changer for volume. Plus, Cybertruck production numbers.
Anything else on the tech or operations side?
Battery technology, always. 4680 progress, any new breakthroughs, raw material sourcing, it's fundamental. The supercharger network is interesting too, opening it up to other brands. New revenue, plus it cements their NACS standard.
And the competition isn't sleeping.
Not at all. Keep an eye on competition. Traditional players like Ford, GM, VW are getting serious about EVs, and the Chinese giants BYD, NIO, XPeng are incredibly aggressive, especially BYD.
And then there's him.
And then there's Elon Musk. His comments on X, his focus sometimes seems split with SpaceX, XAI, Neuralink. Any controversies, they directly impact the stock. It's unavoidable.
Wow, okay. What else? Global stuff.
Yeah, global expansion, new gigafactories like the one planned for Mexico, any recalls or safety issues can dent the brand, and the overall macroeconomic environment. Interest rates, inflation, that affects demand for expensive cars. It's a lot to track.
It really is. And how does all this news feed into overall market sentiment for a stock like Tesla?
Sentiment is huge for Tesla. It's a quintessential growth stock. So high interest rates, that can hurt, makes future earnings less attractive. But then hype around AI or robotics can send it soaring again.
And Musk's influence is direct.
Incredibly direct, especially on retail investor sentiment. His posts can literally move the price. You also watch institutional versus retail flows, short interest levels, and how analyst opinions and social media are shaping the story. It's this constant push and pull of narratives.
Okay, let's talk rivals. Competition. Who are the main players Tesla is up against, and how does Tesla really stack up now?
Well, the whole industry is shifting fast, right? EVs are going mainstream, price competition is brutal, battery tech is leaping forward, NACS is becoming the standard here. Plus, AI, autonomy, robotics, energy storage. It's a dynamic battlefield.
So who are the key competitors in that field?
In EVs directly, you've got BYD, huge scale, vertically integrated like Tesla, dominant in China and pushing globally, very aggressive on price. Then Volkswagen, massive global scale, huge distribution network. Ford and GM have deep roots, especially in trucks and SUVs, and loyal customers.
What about the newer EV companies?
Startups like Rivian have carved out a niche, plus their Amazon partnership is significant. Lucid is focused on the ultra-premium end with really advanced tech.
And in the self-driving space?
There, you look at Waymo, Alphabet's company, years of experience, robo-taxis operating in some cities, and Cruise, backed by GM, though they've had some significant safety setbacks recently.
So against all that, what are Tesla's real concrete advantages today? What's their edge?
Despite the rising tide, Tesla still has some powerful advantages. First, overwhelming tech leadership in key areas. Their battery tech, especially 4680 potential, powertrain efficiency, software, and FSD, despite challenges, has collected vastly more data than rivals.
The brand is still incredibly strong, too.
Immensely. Powerful brand and fandom, high loyalty, and Musk provides marketing basically for free, Their vertical integration model is still a huge edge: efficiency, control over the experience, the supercharger network.
And those future bets we discussed.
Exactly. Aggressive future tech investment. They're not just an EV company. The bets on AI with Dojo, robotics with Optimus, the whole energy ecosystem. That broad ambition differentiates them. Plus, their production efficiency. Gigafactories are designed for continuous improvement and scale.
Okay, advantage is noted. But no investment is risk-free. Tesla feels like it carries more risk than many. What are the big dangers investors need to keep front of mind?
Absolutely. High potential comes with high risk. Number one is probably intense competition and price pressure. The EV market is getting crowded. Rivals, especially from China like BYD, are pushing prices down hard. That squeezes margins.
And the FSD robotaxi dream, what if it stalls?
That's a huge risk. FSD and robotaxi commercialization uncertainty. The tech is hard, really hard. Regulatory hurdles are a significant thing, NHTSA scrutiny. And will the public broadly trust it soon? Big questions there. Delays or failure would hit the valuation hard.
And the Musk factor as a risk.
Definitely. The Elon Musk risk, his unpredictable statements, potential distraction from his other companies like SpaceX or XAI, legal issues, it all adds volatility and uncertainty.
What about making the actual cars and batteries?
Production and supply chain risk is always there. Delays ramping up new factories like Mexico, instability in raw materials, lithium, nickel prices, geopolitical stuff, especially U.S.-China relations, impacting their Shanghai factory.
And the stock price itself reflects a lot of optimism.
That's the high valuation risk. The current price assumes massive success on many fronts. If growth slows or FSD is delayed significantly, the downside could be substantial. It's priced for near perfection.
So those are some serious risks. What internal strengths does Tesla have to navigate these choppy waters? What helps them overcome challenges?
They do have formidable strength. First, leadership and vision. Love him or hate him, Musk provides a powerful, driving vision. Decision-making is fast. Goals are ambitious. It pushes the company relentlessly. Then, technology and R&D. They genuinely lead in battery tech, powertrain, and their FSD approach, powered by incredible amounts of data, is unique. Plus, the serious investments in AI like Dojo and robotics like Optimus.
And their manufacturing.
Production and operational efficiency. The gigafactories are state-of-the-art, constantly improving. Vertical integration helps control costs and innovate processes faster. They can scale production quickly when things align. And don't underestimate the brand power and customer loyalty. It's a massive asset. Creates demand, reduces marketing costs, builds that network effect. Finally, financial soundness. Generally, strong cash flow lets them fund these huge bets. They allocate capital aggressively towards growth.
Okay, we've covered a massive amount of ground here. Vision, financials, competition, risks, strength. If you had to boil it all down for our American investor listener, what are the absolute key takeaways?
Right, let's synthesize. For you, the investor, Tesla clearly has immense growth potential. Leader in EVs, yes, but also pushing hard into AI, robotics, energy. That tech leadership, the brand, Musk's drive, those are core strengths. However, you have to weigh that against intense competition, the volatility tied directly to Musk, and real uncertainty around FSD and robotaxi timelines and regulation. And that high valuation means high expectations. Misses get punished.
So what should people watch most closely?
For me, it comes down to maybe 4 key things. Keep your eyes glued to vehicle deliveries and margin trends. Watch every development in FSD technology and its path to commercialization, especially robotaxi news. And, like it or not, you have to monitor Elon Musk's actions and statements. So the bottom line, Tesla's probably best suited for an investor comfortable with high volatility, high risk, but who has a strong long-term conviction about these disruptive technologies changing the world. It is definitely not a sleep well at night stock for everyone.
We've definitely seen how Tesla continues to challenge definitions, pushing boundaries in tech and business. Hopefully this deep dive gives you a much stronger framework for thinking about Tesla, whether it's for your portfolio or just understanding where technology might be heading.
And maybe one last thought. Beyond the stock price, Tesla's story is really about these massive forces, transportation, energy, AI, all converging. How that plays out will impact way more than just our portfolios. It really makes you wonder, what is next for this incredibly dynamic company? How will it keep shaping our future?
If this deep dive was helpful, please subscribe.